Good afternoon, everyone. Thank you for joining us for today's webinar. My name is Lois Cruz of FirstMetroSec Securities, your one-stop investment platform for stock trading and mutual funds. So today we are joined by more than 100 webinar attendees from different parts of the Philippines. We would also like to acknowledge Ms. Lady Cagape of the Ateneo de Davao University with her whole class tuned in. So that's 100 plus around 50 students with her. Today, we are presenting an introduction to technical analysis with Recognia to be delivered by Mr. Peter Ashton, Recognia's Vice President for Customer Success, who joins us directly from Ontario, Canada. Just a little housekeeping or some reminders before we get started. If you have any questions during the presentation, please type them into the question box in your GoToWebinar control panel. So our presenter will answer them during the Q&A session at the end of the webinar. However, because of the size of this group, we may need to select specific questions only. So if your question or questions remains unanswered, you may post them on this webinar's Facebook thread, and we'll have our presenter reply to them at a later time. So without further ado, I turn you over to Mr. Peter Ashton. Hi, Peter. Good morning.
Thank you, Lois. How are you?
All good.
Okay, thank you. Well, thank you very much for having me to present in this webinar today entitled Introduction to Technical Analysis in Recognia, and welcome to First Metro account holders who are joining today. So as our agenda for this webinar, I'd like to begin by talking a little bit about what technical analysis is and what's it all about. And I recognize that some of you may already be using technical analysis in your trading and investing today. And for those of you who are, this is going to be a little bit of a review. But for those of you who are not, consider this to be a little bit of an introduction to why you might want to add technical analysis to your investing toolbox. We're going to talk a little bit about Recognia's specific approach to technical analysis, which is an event-driven approach. And we'll talk about 3 different classes of technical events that we detect, those being the short-term patterns, the indicators and oscillators, and finally classic patterns. And at the end of this presentation, we're also going to go to the First Metro website and actually do a live demonstration showing you how you can leverage the Recognia capability built into the First Metro site. And as Lois says, at the very end, we'll handle our questions and answers. So with that said, I'd like to begin. I'll give you a quick introduction to who Recognia is. Recognia is part of the Trading Central Group since 2015. We are leaders in technical, fundamental, and quantitative research worldwide. We operate out of major offices in London, Paris, New York, Hong Kong, and Ottawa, and provide global coverage of stocks, ETFs, indices, options, foreign exchange, and futures. Let's talk a little bit about some of the basics of technical analysis. And at its core, technical analysis is really all about looking for patterns in the price and volume histories of securities that tell us something about the attitudes of buyers and sellers. So if we think about every trade taking place on an exchange, that trade represents an agreement between a buyer and a seller for what is the fair price of that security at that moment in time. And that fair price reflects everything that's publicly known about that security, including the fundamentals, including the news, including the general market sentiment about that particular stock or that sector of the market. All these things get taken into account in the price. So by following changes in the price, it tells us something about the shifting balance of supply and demand for that stock in the marketplace. And by understanding those shifting balances, we can understand a little bit more, which can help us make better investing and trading decisions. Many people are surprised to learn that technical analysis actually is not a new practice. In fact, it's over 400 years old. It actually dates back to the rice markets of Japan back in the 1600s. And in fact, modern technical analysis as we practice today really dates back to Charles Dow. And this is the same Dow we know today from the Dow Jones Industrial Average. He was also the very first editor of the Wall Street Journal. And Charles Dow basically observed the stock markets back in the late 1800s and believed that the prices of securities tended to move in cycles. And Dow named these cycles the primary trend, intermediate trend, and short-term trend. And I've drawn those trends on this chart. So the blue line is what Dow called the primary trend, and he believed that lasted anywhere from 9 months to 2 years. Superimposed on top, we have what's called the intermediate term trend, which lasts anywhere from 6 weeks to 9 months. And last, we have what's called the short-term trend, lasting anywhere from 2 to 6 weeks. And what's important to note is that in many places, all these trends are moving in the same direction. So for example, over here on the left-hand side of the chart, we have all three trends moving upward. Whereas, for example, over here on the right-hand side, we have places where the primary trend is down, but the intermediate trend and the short-term trend are moving up. So by understanding where we are in each of these cycles, it can help us to make better trading decisions. If anybody comes away from this presentation with a desire to learn more about technical analysis, then I really very highly recommend this book called Technical Analysis of Stock Trends. This is probably as close as there is to a Bible of technical analysis. This book actually came out in the 1950s and is now in its 9th, or I think it's even its 10th edition. And there's a great quote from this book that I wanted to use to explain why it is that technicians are so obsessed with studying the price. Edwards and McGee said that the market price reflects the hopes and fears and guesses and moods, rational and irrational, of hundreds of potential buyers and sellers. Price is the only figure that counts. So again, that reflects the belief that by understanding the price, we're also understanding all the things that go into deriving that price. Let's take a look at an example. So here's a example of a real security. This is Micron Securities. And you can see basically this stock chart has a very interesting price history. So it had a big rally back in early 2014 up to about 36. It then declined down to all the way down to about $10 in early 2016. You can see this tight channel it formed as the stock was in that decline before it turned around and rallied quite sharply, moving up from $10 to $32 over about the next 6 months. Well, wouldn't it have been good to know that this opportunity here in early 2016 would have been a great chance for you to build a position in Micron and be prepared for this big run-up that was to come? But how could you have known that that would be a good chance to buy Micron? Well, technical traders would have said, well, there's an opportunity here because of a pattern we call a head and shoulders bottom. So the head and shoulders bottom is what's called a classic price pattern. This is a bullish reversal pattern. It tells us the previous bearish trend, this bearish trend that started here in late 2015, was about to reverse. In the case of a head and shoulders bottom, we had 3 successive rallies and declines, each time bouncing off this horizontal red line. And that red line is called the neckline. That neckline represents a level of resistance to the price of the stock. Where we broke through that neckline on the 3rd attempt, that indicates a previous level of resistance has now been overcome, and we expect the stock to then rally from that point, which it actually went on and did too. So I mentioned that Recognia has a little bit of a different way of doing technical analysis in the sense that we don't basically make you do it on a chart-by-chart basis. We have what's called an event-driven approach to technical analysis, meaning that we analyze all the securities that trade on the exchange, and we look for what are called technical events. And technical events are things that are of interest to a technical trader. So we divide these into 3 different event classes. And I'm going to go through those quickly and give you a couple of examples of each, but start with what are called the short-term patterns. And as the name suggests, these are patterns that form over the short term and have influence over the fairly short term, and they're based on the shape and relationship of candlesticks or price bars. I'll give you a really good example. This is, again, a real stock chart. This is Symmetrical, and you can see outlined in red here we have a particular candlestick, and this candlestick is known to technical traders as a hammer. Why do we call it a hammer? Well, it kind of looks like a hammer. It has a hammer head on top and a long handle coming down. The hammer is what's known as a bullish reversal pattern. This tells us something about the attitudes of traders on this particular day. So let's think about that for a second. So here we have a case of a stock that's been declining over a number of past trading days. On the day that this hammer forms, the stock opens right near the highs of the day and then actually goes on to trade lower almost immediately. So it trades much, much lower over the course of the trading day. But then something happens that causes the stock to rally, and we actually close again near the highs of the day. So what does that tell us about the attitude of traders on this particular day? Well, they started the day very, very bearish. The stock went immediately lower. Something happened, though, during the course of the trading day to cause their sentiment to reverse, and the price actually moved higher and actually closed back near the highs of the day. So the hammer can be an indication that the sentiment of traders has changed in regard to a particular security, and that the price may go on to rally over the short term. And in this particular case, you can see that's exactly what happened. After declining for a number of weeks, the stock went on to rally immediately following this hammer, moving from about 27 27.75 up to around 31.50 over just a few days. Now, of course, the challenge in trading a pattern like the hammer is you don't get the benefit of seeing what happens next. So how would you actually go about trading a short-term pattern like the hammer? Well, I can give you two suggestions. So one, if you're a conservative trader, what I would say is you're going to see that this hammer has occurred on a stock, and in fact, Recognia will tell you that it's occurred. You may actually want to wait 1 or 2 trading days and just make sure that that reversal is actually taking place. Make sure the stock has reversed and is trading higher before you actually go and buy your shares. Now, remember though, you can't wait too long because these short-term patterns have an influence over about 10 trading days. For people who are more aggressive in their trading, what they may choose to do is actually buy immediately following the occurrence of a hammer, but then make sure you have a stop loss in place to make sure you protect your capital in the event the price happens to go in the opposite direction than you expect. Another class of technical events are called the indicators and oscillators, and these are probably the best known types of technical events. In fact, when most of you are thinking of technical analysis, probably what you're thinking of is indicators and oscillators, and these are based on moving averages or other kinds of mathematical functions. And the reason why these are so well known is because every charting program provides all kinds of indicators and oscillators. And in fact, these kinds of events go back a long, long time, even before the days of computers. So different kinds of indicators were used because they're really, really easy to calculate. So indicators and oscillators are no more predictive than the other kinds of event classes, but they're better known because they're provided by all different kinds of charting software. Now, typically indicators and oscillators come in 3 types. We have what are called the trend following indicators, and these are basically means of smoothing the price history so trends can be more clearly seen as lines. We have what are called momentum oscillators or momentum indicators, which measure the speed or direction of price changes. And last, we have what are called stochastics that measure the position of the closing price relative to the recent highs and lows. So moving averages are very, very commonly used in technical analysis, and there's actually many different kinds of moving averages that technicians have defined. The simplest one is called the simple moving average, basically defined as just the average price over the last n trading days. So for example, if we're talking about the 50-day simple moving average, that's the average price over the last 50 days. The way we calculate that is we basically just take the closing price over the last n days and divide it by the number of days, say 50 in that example, and that gives us today's value for the 50-day simple moving average. Now, these moving averages tend to work best in trending markets. They don't tend to be as useful when the markets are sort of moving in a very tight trading range or whipsawing back and forth. And people often ask, where do these time horizons come from? Like, why is it the 50-day or why is it the 21-day? Well, these time frames are all relative. They just come from history. So, for example, we use the 200-day moving average in a lot of different kinds of technical analysis, especially commodities trading. That originally came from the silver market because Kodak used to be the world's biggest buyer of silver, and they used to keep a 200-day supply of silver on hand. We use a 4-month moving average for the soybean market because that's the shelf life of margarine. So these are just historical and they come from past practices. So here is a couple of examples of how you might use simple moving averages in your trading. So here again is a real price chart for a company, Hewlett-Packard. And I've drawn 2 different moving averages on this price chart. So in red, we have the 200-day simple moving average. And in blue, we have the 50-day. And you could actually use these in 2 different ways. So notice that for the 200-day simple moving average, notice how many times the price comes close to or touches that red line without actually breaking through. So this red line is actually forming a nice level of dynamic resistance to the price of the stock. If we were to actually extend this price chart beyond the right-hand side of what's shown here, and if the price was to again rally to back close to that red line, we might expect the price to actually bounce off rather than actually breaking through. So that's how you might actually use the 200-day simple moving average. Now the 50-day is a bit different. In fact, you could actually make a very simple short-term trading indicator out of this simple moving average. So if I use a green arrow to show where the price crosses in the upward direction and a red arrow to show where it crosses in the downward direction, you could have actually used this basically as a trading indicator. So you could have bought where we have the green arrow, so you would have profited from this uptrend right here, and you could have sold, or better yet, sold short where the red arrow is, and you would have profited from this decline. So buy here, sell short here, and so on. So you can kind of see how that would have made a nice, simple, short-term trading signal. It probably would have made you some money. And last, we're going to talk about the classic patterns. And in many ways, I think the classic patterns are the most actionable kinds of technical events because unlike the short-term patterns or indicators and oscillators, the classic patterns can also tell us something about what may happen next. And these are formed by distinct price swings forming a particular shape on a chart. I'll give you an example. So here's one we call a symmetrical continuation triangle. And a symmetrical continuation triangle is a bullish continuation pattern. It tells us the previous bullish trend is likely to continue. So here's an example, again, a real price chart. And you can see this stock has been in an uptrend over a number of months. And then where this triangle pattern forms, the stock is basically taking a breather. It's made its way up to about 18, and it kind of seesaws back and forth between 18 and 16. And the triangle is formed by an upper level of resistance and a lower level of support. And those support and resistance lines are, in the case of a triangle, converging. So the price seesaws back and forth between support and resistance. But because those lines are converging, eventually the price is going to have to break out either one way or the other. Either break out above the upper level of resistance, that'll be a bullish indicator. That's what happened in this particular case. Or it could break out below, and that would be a bearish indicator. So in this case, we broke out above the upper level of resistance right here. And again, that's what forms the triangle and tells us that the previous bullish trend, this bullish trend that's gone on since November 2016, that we expect that trend to continue. And in this case, that trend actually did go on to rally sharply again after this sort of pause in this continuation triangle up to about $23. Now, it's very important when talking about classic patterns, this idea of confirmation. So until the price breaks out above this upper level of resistance, this is not a triangle. We have to break out either above or below to confirm the pattern and make it an actionable technical event. So until we've actually confirmed the pattern, you can't really be using these for trading. So that idea of confirmation is very, very important. Now, the other interesting thing about classic patterns like this triangle is, as I said, they can tell us something about what happens next. So what technical traders will do is they can derive what they call the expected move or the target price. And they do that by measuring the height of the pattern. So notice here this purple arrow, we're measuring the height of the pattern from the widest point, and that is called the expected move. So we can add that amount of price to the confirmation price. That gives us kind of a guideline of where we think the price will go. So in the case of this continuation pattern, we confirmed this at about just right around $17, but the height of the pattern suggests we'll move to around 20, which in fact we did do. Now we can also derive what is called the trading horizon, and that is derived by measuring the pattern length. From where the pattern started to where the confirmation occurred, we add that amount of time to the confirmation date, that this purple amount here, and that gives us kind of a guideline of how long we think it will take to reach the target price. So they're very actionable in the sense we actually get a target price of where we think the price will go, and we get a guideline as to how long we think it will take to get to that target. So we've gone through a whole bunch of different kinds of technical events. We've gone through some short-term patterns, some indicators and oscillators, some classic patterns, and so on. I'm going to spend just a little bit more time on the classic patterns just because I think they are so actionable. So let's talk about a few other kinds of classic patterns that we can see in technical analysis. So one of the ones that we see and is very, very tradable is called the triple bottom or triple top. So in all these examples, I'm going to talk about the bullish pattern, but there's a converse bearish pattern as well. So the triple bottom is what's shown here. We have basically a stock which has been in a decline and goes through 3 successive rallies and declines where the 3 declines are about the same level. And we have this horizontal red line we call the neckline that basically indicates the upper level of resistance in this pattern. Notice this green rectangle I've drawn here. So that is what's called the target price area. So I talked about how we derive a target price for classic patterns. Well, that's what this is. So this dark green area at the top, this is where the pattern suggests the price is going to go. And the width of this green rectangle is how long we think it will take to reach the target price. Now, double bottoms and double tops are also very common, and they're very similar to the triple bottom, except that we have 2 rallies and declines. And I had a person ask me in a webinar that I did a little while ago whether it was true that all triple bottoms were also double bottoms, and in fact that's not the case. In fact, triple bottoms and double bottoms are two completely separate things, because for this pattern to be a double bottom, we have to break out above this neckline, above this horizontal red line. It is not a double bottom until that happens. And of course, once that happens, it can no longer be a triple bottom. So these are two completely separate, different types of technical events. As one of my examples, I talked about triangles, and there's lots of kinds of triangles, which is why these are very, very common types of technical events. So in all cases, triangles are formed when we actually have an upper level of resistance and a lower level of support, and in the case of triangles, those two sets of lines are converging. We have a number of different kinds of triangles. We have what are called continuation triangles, which I showed you an example of before, and this is a continuation triangle shown on this particular chart. But we also have other kinds of triangles we call top triangle or bottom triangle, which can be reversal patterns that tell us that the price is likely to reverse. Another very common type of classic pattern is what's called the upside or downside breakout. These are sometimes called rectangle patterns. And what basically happens is this is sort of a consolidation period in the history of a stock. So again, the price is seesawing between a horizontal level of resistance and a horizontal level of support. And eventually we will break out above the upper level of resistance, and that's going to give us our upside breakout. And a megaphone is a similar kind of pattern. And in fact, many of you may look at the megaphone and say, well, this kind of looks like the opposite of a triangle. In a triangle, we have support and resistance lines that converge. Well, in a megaphone, those lines are diverging. So what does that tell us about the market? Well, megaphones are fairly rare, and the reason they're rare is because it's an indication of a market that's out of control. There's a greater and greater divergence between the opinions of buyers and sellers, which leads to those bigger and bigger swings in between support and resistance. However, at some point, either buyers or sellers get control of that market. In the case where we break out above the upper level of resistance, that's a megaphone bottom, that's a bullish event. And in the case where sellers get control, we break out below the lower level of support, that would be a megaphone top. And I'll mention maybe one or two more. So diamonds. Diamonds are also very common kinds of classic patterns, and these are, you can think of these almost like a megaphone followed by a triangle. So we have bigger and bigger swings in the price history of the security, and then all of a sudden opinion starts to converge between buyers and sellers, and we get this converging formation, and finally the price breaks out above or below the upper edge of the diamond, and that signals either a bullish or bearish oncoming trend. I'll do one more, which is the rounded bottom, and this is a very, very rare kind of classic pattern, and unlike all the other kinds of patterns we talked about, where opinion seems to change rather rapidly, a rounded bottom or rounded top is an example where the opinion of buyers and sellers changes gradually over a period of time. So for example, in this case, you can see that over a number of weeks and months, the price has basically changed, the opinion has basically changed, and we've moved from a bearish market to a bullish market, and where we actually cross the moving average is where we actually confirm this rounded bottom pattern. Some of you may have heard of a pattern called a cup and handle pattern. A cup and handle is really just a very special case of the rounded bottom. So rounded bottom is the more general case of the cup with handle. So we've talked about a number of different kinds of technical events. We talked about hammers, for example, in short-term patterns. We talked about head and shoulders, and we talked about symmetrical triangles as part of our classic patterns. We talked about price crossing the moving average as part of our indicators. And what many of you may now be thinking is, well, gee, there seems like there's a lot of these different kinds of events, and how am I supposed to remember what everything is? And this is where Recognia can step in to help you. So we have built software that automatically analyzes the market. And rather than looking at a handful of stocks every day, we look at every single stock in the market every day, and we search for these different kinds of technical events. There are over 60 different kinds of events we look for against every single stock in the market, and we can basically tell you when those events have occurred, and we can use that as trading ideas to tell you there's something interesting in the price history of this security you may want to know about, or we can give it to you to help you to validate an idea you already have. So maybe you've already been following a stock for some period of time. Is it today the right day to buy? Well, we can give you information on what technical events have occurred on that stock that you can use to understand whether today is the right day to get in. So what I'd like to do at this point, I'm going to do a transition. I'm going to go to the First Metro website, and let's actually do a demonstration. Let's look at a few stocks, and let's see what technical analysis is telling us. So I'm going to just switch to my browser. So here I have the First Metro website loaded, and the first thing I'm going to do is actually just show you where I find the Recognia research on the site. So we're going to find the Recognia research in a couple of places, but most commonly we're going to find it here under charts. So you can see it says Recognia, and we have a getting started link, which is educational, and a technical event lookup link, which you could use to type your own idea in. But also right here on the main page, it says today's technical events. So these are some trading ideas given to you by Recognia based on technical events taking place in the market. So for example, against the green arrow, these are stocks that have had interesting bullish technical events. So for example, we had an inside bar. This is a bullish short-term pattern against Security Bancorp. Another inside bar against Holcim Philippines. A double moving average crossover against Petron Corporation, and so on. And in every market there are some people who are bullish and some people who are bearish, so we'll also give you a number of bearish trade ideas as well. And I'll come back to these in a few minutes. But the most common way people tend to use technical analysis through Recognia is what's called the event lookup. So maybe you already have an idea of your own. So here I'm going to look at a stock that I had looked at recently. So I'm going to just type the symbol up here in this little window. This is EEI Corporation, and basically the stock is trading at $14.30. That's the last price. And if we look down the list here, we have a summary tab. It tells us that there are currently 18 technical events active against this particular security. And if I come down here, here is a price chart. And I'm going to actually just click this little arrow here just to make the price chart a bit bigger. So you'll notice that we have a history here going back all the way to October 2015. You'll notice that ever since late November 2015, this stock has actually been in an uptrend. It's had a few ups and downs along the way, and in fact the uptrend really started kind of right here about January 2017. But since January, the stock has actually moved pretty aggressively in the upward direction. And notice all these green dots and red squares we have drawn on our price chart. So what are those all about? Well, the green dots are the dates where we have had bullish technical events. The red squares are the dates where we have had bearish technical events. So notice that this decline over here was actually preceded by this bearish technical event. This uptrend we had starting in January 2016, January 2017, has actually been preceded by a whole bunch of these green dots or bullish events. And in fact, if you hover your mouse over any one of these, it tells you at the top left what that particular classic pattern was. So in this case, this is a head and shoulders bottom. We had a head and shoulders bottom. We had price crossing the 200-week moving average. We had an upside breakout. We had a moving average convergence divergence indicator, and so on. And in fact, if I actually click on these events, like here's a head and shoulders bottom that occurred back in February 2017, if I click on that, it'll actually draw that pattern on the price chart for me. So here's a head and shoulders bottom. As remember, we said this is a bullish reversal pattern. So the price had actually been declining for a number of weeks. Here's a price channel that we found. And then we formed this head and shoulders bottom. Again, the price rallied 3 times before breaking through that neckline. So this pattern was confirmed on February the 9th. And this pattern has a particular price target associated with it, by the way. So if I come over here, you can see the price target associated with this pattern is 1020 to 1070. And did we make it to 1020? Oh, actually we did. We made it up to about 1060, 1070 before the price pulled back a little bit. So this particular one would have worked really well for you. Let's just see what else we have here. So I think we also had another classic pattern, which was an upside breakout. So let's just click on that one. So here's our upside breakout. That occurred on May the 19th. At the time that this pattern occurred, the stock was trading at 1030, and this particular price pattern suggested a target price of $18 to $20 in the next 100 days. So we haven't quite got there yet, but we're getting very close at this point. Let's try another one. Another stock that I was looking at was a stock, the stock symbol VITA, V-I-T-A. This is Vita Rich Corporation in the consumer packaged good field. And what I'd like to show you is this particular stock has had a lot of technical events. In fact, they've got 26 currently active technical events. And coming down here, you can take a look. The stock's got a pretty interesting technical history. It's been in an uptrend since, looks like the spring of 2016, but it's had a couple of very noticeable spikes. So here there's a big spike in July of 2016. And the stock has actually been moving up quite nicely ever since early May 2017. We can actually zoom in on some of these technical events just by scrolling the mouse wheel. So for example, here we had a symmetrical continuation triangle that was bullish. We've had a double bottom pattern, a symmetrical triangle, and so on. The thing I wanted to show you is you can also sort these by the time horizon. So this is what's called the summary view. This is all the technical events. But maybe I'm only interested in this stock as a short-term trade. I want to just hold this for 2, 3, maybe 4 weeks, that's all. I don't want to hold it beyond that. So what does technical analysis tell me about the short-term outlook for this security? So if I click on this short-term tab, then I just see events which are impacting this security in the short term. Okay, so you can see a number of different short-term events. And in fact, we scroll down, we currently have 6 bullish short-term events and 5 bearish. So the situation's a little bit mixed for Vita-Rich Corporation in the short term. If we turn our attention to the intermediate term, well, then we have 5 bullish events and 2 bearish. So the weight of evidence turns much more bullish in the intermediate term. And then last, if I look at the long-term view, which is looking out more than 9 months, then this stock is very, very bullish. In fact, there's 8 bullish events and no bearish events. So here's an example of a security where it's a little bit mixed in the short term, so the price could go up, either up or down over the next 2 to 6 weeks. But looking more at the intermediate and long term, this is a stock that's poised to move higher. And in fact, this is confirmed by looking at the price history. So again, we go back to the summary view. And if I look at the price history, this is a stock that's been moving up for quite some time, and technical analysis tells us we expect the price to move higher in the intermediate and long term. Incidentally, some of these technical events are also interesting. So this double bottom pattern we mentioned here, right here, I can click on that and let's draw it. Here's a double bottom. The price had gone through a little bit of a decline. We formed this double bottom pattern, which is a bullish reversal pattern, telling us the price is likely to reverse. That was confirmed right here, which is on May 25th, 2017. And the target price for this particular pattern is 214 to 222. And by the way, the price was at 195 when this was confirmed. So 214 to 222 is sort of in this range here. Did we make it there? We actually did. We made it actually much higher, up close to 260. So this particular technical event seems to have worked quite well for you. I'm going to just do one more example here. PMPC. It's another one I've been looking at. This is Panasonic Manufacturing, Philippines. So here's a stock. It's currently trading at 1180. It's in the computer hardware sector. In the summary view, we can basically see that we've had 10 bullish and only 4 bearish events. So in the summary view, this is actually looking quite bullish. Let's just maximize that chart. So you can see that, ever since about, what date is that? Ever since about February, the stock has actually been very, very bullish. I'm going to just zoom in a little bit here. So you can see we've actually moved up very sharply since even the start of the summer. Moved up from less than 7 to over 11 at this point. So this has actually moved very, very well. And look at how many different bullish technical events have gone along with that uptrend. Starting here, we had a moving average convergence divergence, triple moving average crossover, the 4-week, 9-week, and 18-week moving averages all crossed over. Here we had an ascending continuation triangle. In fact, let's pick that particular triangle and let's just draw it. So here you can actually see a triangle pattern which has occurred, and the target price suggested by this pattern is 890 to 920. It was confirmed at 836, and of course the price went well beyond that target price, up to about 14 Philippine dollars. So that one's actually worked out very, very well. Again, let's look at the different horizons. Let's look at the short-term view. In the short-term view, we have 4 bullish and 3 bearish events, so the market's a little bit mixed in the short term. In the intermediate term, though, the stock is looking much more bullish. We have 3 bullish and only 1 bearish event. And then last, let's look at the long-term view. And in the long-term view, you can see that we have 3 bullish and no bearish events. So here's an example of a stock, again, could be a little mixed in the short term, so there could be an opportunity to acquire some shares at a slightly lower price than what we're trading at today. But looking at the intermediate and long term, the stock looks quite bullish. So that's 3 examples we've looked at, and let's go back here. I want to also show you that if you go under this Getting Started link, we have some technical analysis education here. So there's a getting started guide. You can actually click on this link and get Recognia's getting started guide. And again, over here we have today's technical events as trade ideas. So for any one of those, for example, you might choose to do more information. And if you actually want to get more information on one of those, like this one here, for example, SM Prime Holdings, if I actually, well, actually I can go and type that symbol into technical event lookup and do some more investigation on this particular stock. So this is a very, very useful tool to help you to automate some of your technical analysis, to find trade ideas you may not have found on your own, and perhaps to come across a stock which might have escaped your research. It's also a very good way to actually validate and confirm some of the ideas you may have for your investing and trading on your own by looking at what technical analysis is saying about a particular stock today in either the short term, intermediate term, or long term. So that is the end of my demonstration. And before we, just before we have the question and answers, I wanted to mention that we have many resources available on Recognia's website. If you go to our website, www.recognia.com, we have a section called Traders Resources, and in here you'll find some white papers and industry articles and frequently asked questions and so on, which you may find very, very useful. And at this point, I think I'm going to just turn it back to First Metro, and we can actually have a question and answer session. And if they want to wrap up and talk a little bit about some of the other education that they're going to be running over the next period of time, that would be a good time to do that now. Lois, did you want to talk a little bit about the upcoming session you have?
Yes, for our participants here from Metro Manila and also those who are planning to visit Metro Manila, First Metro Securities will be having our Guided Investor Fearless Trader Learning Series, or the GIFT series, on September 9 and 10 at our office. It will be a 2-day course focused on analyzing companies and reading price charts, with the second day solely focused on technical analysis. If you would like to join and learn more, you may visit our website at www.firstmetrosec.com.ph for more details and also to register. Plus, you may also follow our Instagram, Facebook, and Twitter social media accounts, or join our Viber public group chat for the latest schedule of our seminars, announcements, promos, stock updates, and a lot more.
Okay, so maybe we should run the